Joining us live with more reaction is economist David Bassanese. David, thank you so much for your time. What's your read on what this is going to mean for us?
Look, I think, as you mentioned, Australia, by the standards of other countries, has gotten off relatively lightly. It's a 10% tariff. That's the lowest tariff that has been applied to countries around the world. Nobody has not got a tariff. So we're set. So yeah, we've got off relatively lightly, but the overall impact of the tariffs that were announced was certainly, I think, more than markets expected. And we've seen a negative reaction in share markets. So the concern for us is not so much the direct impact of the tariffs, but the indirect effect of the tariffs on other countries and what that might do to global trade, global economic activity in the months ahead.
And on that front, our Asian neighbours and trading partners could really be in some strife.
Yeah, well, yeah, potentially. They obviously China has copped a pretty big increase in tariffs, with something like a 54% total increase in tariffs for China. So that's a very big hit. And Taiwan, South Korea also facing large tariff increases. So, look, the thing about China is, I don't think Chinese growth is going to slow. If this does have a material impact on the Chinese economy, I would anticipate the Chinese authorities would respond with some stimulus measures of their own. So, China, they're not going to let their economy be too shaken by this. But certainly, it's certainly reverberating around the world at the moment.
And David, what does it mean for the US, do you think? I mean, could it be a case of cutting off your nose to spite your face?
It definitely is. I mean, I think no credible economist anywhere in the world thinks a tariff increase like this is good news for the US economy. First and foremost, inflation's going to go up. That's going to hurt real incomes. It's going to hurt corporate profitability. So that's going to send economic activity downward. To the extent there's any stimulus in terms of protecting, or promoting US industry, that's something far down the track. And so the initial impact will be negative on the economy. And even that possible positive down the track must be offset by the closed doors that US exports will now face in many other countries through trade retaliation. So it's really an own goal for the US economy. Very unfortunate, because the US economy was doing quite well up until these completely unnecessary policy changes. And yeah, there is a material risk of recession now in the US. I think many banks will be loath to call that, but it's certainly getting up to, I wouldn't say base case, yes, but certainly a higher probability than it needs to be. And that's a risk we're going to face over the next few months.
And it really just does upend things right around the world, doesn't it? I mean, this is just walking back decades of steps being made towards the whole free trade system.
Yeah, exactly. I mean, look, the US economy is the envy of the world. It's been growing more strongly than Europe, growing more strongly than Japan. Its share market has been outperforming global markets for over a decade. Corporate profits are higher in the US as a share of GDP than anywhere in most other developed countries. Unemployment is at full employment. They don't need any stimulus to activity from trade protection, because despite all the nasty things that Donald Trump has said about trading partners, the economy is at full employment and has been growing quite well, and inflation has been coming down over the past year. As I said, it's been the envy of the world, and he's just basically inflicting an own goal on the economy, which is very unfortunate.
David, always appreciate your analysis. Thanks for joining us.
Great to be with you.